Question number 2 is Collins Golf Course Maintenance offers golf course products and maintenance services. The business is owned by Colin Golf Green. Colin provided the following account information for the year ended 30th of June 2014. And he's given us all his accounts. Down the bottom here it says depreciation of the motor vehicles and the mowing equipment has not been recorded for the year ended 30th of June, so it's not been recorded. The vehicles are depreciated on a straight line basis. They have a scrap value of $6,000 and an expected useful life of 7 years. The mowing equipment is depreciated using the reducing balance method at a rate of 15% per annum. Note, round to the nearest dollar if required. So we need to do some rounding there. Now, it says prepare a classified income statement for the year ended 30th of June 2014. Prepare a consolidated balance sheet as at the 30th of June 2014. So we've got 2 questions in one here. Now, what's the first thing I want to do when I'm presented with an income statement and balance sheet? Classify, yeah. Okay, so what am I classifying my items into? The current assets, non-current assets, current liabilities, non-current liabilities, equity, what else? Income and expenses. Okay, so they're my classifications. All right, so let's do that. Let's classify it. What have we got? We've got accounts payable, current liability, accounts receivable, current asset, accrued rent expense. Accrued rent expense. Oh, there's big confusion here. It's a current liability. Accrued rent expense. Accrued revenue. Current assets. We accrue some liability or revenue. Accumulated depreciation of motor vehicles. Non-current asset. Accumulated, oh, now that's a negative non-current asset. What about accumulated depreciation for equipment? Negative non-current asset. What about capital? Equity. Cash at bank. Current asset. Cost of goods sold. Expense, yep. Drawings. Equity, yep. Inventory. Stationery supplies expense. Goodwill. Non-current asset. Interest expense. Loan from ZNA Bank, repayable in full in September 2019. Another loan from ZNA Bank, repayable in full in January 2015. Current liability. Motor vehicles. Motor vehicle expense. Mowing equipment. Mowing equipment repairs expense. Easy expense. Rent expense. Fees revenue. So, staff wages expense, easy. Staff wages payable. Current liability. All right. Okay, so we get to that point, and now we probably start to think about preparing our income statement, because we'll do our income statement first, but before I want to do that, I want to calculate my depreciation. So I have my depreciation here. Now, it says my depreciation of my motor vehicles and mowing equipment has not been recorded, so I need to work out what my depreciation calculations are. So, because there's no depreciation expense here. I've got some accumulated depreciations, but I'll have to add to those. So let's have a look. Let's just do motor vehicles first. Now, my motor vehicles uses straight line. Does anyone remember the formula for straight line depreciation? Cost minus residual. Divided by useful life. Okay, so my cost in this instance of my motor vehicles is how much? 58,500 minus my residual value, which was 6,000, divided by 7 years. And how much does that equal? 7,500. Okay, and now my mowing equipment. How much is my mowing equipment's cost? So I got 25,000. Oh, actually, first of all, what's its reducing balance? So how do I calculate my reducing balance? Cost minus accumulated depreciation times rate. So my cost now is how much? Mowing equipment 25,000 minus my accumulated depreciation, which is 9,647. 9,647 times how much is it? 15% per annum. Who's done the calculation for me? 2,303. That's good. Now what I've done here is I've obviously made my calculations. So now this is, I can work out that this is my depreciation expense. And my depreciation expense here as well. Now I'm just going to circle those in nice, because I need to include those. But the other thing I need to do is I need to adjust my accumulated depreciations here and here. So my accumulated depreciation is no longer 14,000, it's 14,000 plus 7,500. So it's 21,500. And my mowing equipment is no longer 9,647, it is, how much is it? 11,950. Okay. So is that all good? All right. So now I can start my income statement. So now, I'll hopefully be able to fit all this on the last page. So my income statement, what's the next thing I need to do? Title, yep. So now my income statement, for, what is it, Collins Golf Maintenance. For, what's the rest of my title? For the year ending 30th of June 2014. Now, believe it, this bit here is worth 1 mark. Okay, you need to tell me for the year ending. Now, if you forget which way it works, is it year ending or is it as at? Just go down and have a look here. It says for the year ended. So we tell you exactly what you need to put in the title. Don't shortchange yourself on marks. Okay, so we've got that now. Once I've done that bit, what's the first part of my income statement that I need to look at? Revenue. Okay, so my revenue for the year, what is it? Where's my revenue? Here it is, fees revenue. And it's for 163,203. Now, do we have any cost of goods sold? We do. Hang on, I'm just going to tick the numbers over this way because then I can see them better. I've got cost of goods sold here of 33,000. $33. So my gross profit is 203. All right, next I need to deduct my expenses. Okay, now, shall I go from my biggest or smallest, or should I just go from the top down? Where's my first expense? Equity, cost of goods sold, stationery supplies. I've got my staff. I'll do my staff wages first. My staff wages is 55,000. Work my way up. My rent expense is next. Which is 15,000. Mowing equipment repairs. Which I'm just going to brief them down to mow equipment, 2,500. Motor vehicle expense. How much is my motor vehicle expense? Is 11,000. What else have I got? Interest expense. Interest. Now, how much was my interest? 1,500. Supplies, stationery supplies. $1,000. Inventory, cost of goods sold we've already included. Any others that I need to include? Yeah, there's two more that I need to include, and that's my depreciation here and my depreciation there. So motor vehicle depreciation. My depreciation for my motor vehicle is 7,500, and my depreciation for my mowing equipment is 2,303. Have I got them all? Let's have a quick look. Any other expenses? Tick, 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 tick. Tick, tick, tick. All right, looks like we've got them all. Who's fast with a calculator? 95,803. That is fast with a calculator. So that gives me then a net profit of 34,400.